Amen. Thank you. Okay, we saw a lot of people raise their hand that they've used Investopedia, so thank you very much. We appreciate it. Every time that you use Investopedia, we make 4 pennies. So we made like $3.24 from all your usage, so I could buy like a little Starbucks coffee after this and maybe only add $1 and I'll be in great shape. So thank you. Okay, so I thought I'd start with a story, because who doesn't like stories? So here's a story around our anxiety index. August 24th, 2015, you may not remember this, but the market opened up down 1,000 points. It was 1,000 points down pre-market. I'm standing in my office, my hands in my hair, I'm freaking out. I'm pulling off hair because my 401k is like decimated, terrified, and suddenly the head of marketing for Investopedia runs into my office and says, David, you're not going to believe this. I'm like, what? He said, you're not going to believe this. Our short selling tutorial is up like 10x than it's ever been before. And I'm like, that's pretty cool. You know, the fact that what happens in the market something happens on Investopedia at around the same time is really interesting. And what would be more interesting is obviously if what happens on Investopedia can, and get ready for this, predict what would happen in the market. That is a hell of a lot more interesting and can probably make even more than the $3.24 from your visits. So that's what we're going to talk a little bit about here in the remaining 11 minutes and 19 seconds. So here we go. Okay, so just very quickly about Investopedia. We have 27 million global monthly users. We have about 2 million newsletter subscribers, 1 million Facebook followers, 80 million monthly page views. All of that helps us to get a lot of data about what people are looking at and what people are looking less at. It helps us to potentially see trends around that can be really interesting to a whole group of people. And just as an FYI, yes, Investopedia is owned by the same company that owns Tinder. I don't know what the synergies are between them, but we could facilitate hooking you up with finance, perhaps, if you get the joke. Okay, here we go. So the anxiety index. So one of the things I was telling you about is that there was a huge jump in mid-August around short selling. In January of 2016, it was actually the worst 3 weeks ever in the history of the market. You may or may not remember that. What happened in terms of our short selling also went up like crazy at that time. More interesting if it happens prior to, however, and we're going to get to that shortly. The other thing just to share is we did a little scatter plot. When the S&P drops by only 2%, the number of people looking up the word correction on Investopedia increases by over double on average. So again, there's some interesting stuff happening. So what I decided to do is to reach out to, we have 3 PhD data scientists who are former astrophysicists on staff at Investopedia. And that's really important because they help us with data science and data mining, et cetera. And I said to them, can you figure out whether or not we should create an index based on people looking up different terms on our site and whether or not that can help people to understand information around the macroeconomy? So I want to show you some sharing. So we have 12 big terms because 13 is an unlucky number, so you can't do that, although anxiety is kind of unlucky too, that when people are looking these terms up. And the interesting thing is because our N at Investopedia is obviously very high. You can't do this unless you have hundreds of thousands, not millions of people looking up this type of data on, frankly, a daily basis. And we have that. So it puts us in a unique position to do it. So here's what we saw. Okay. Something happened in 2008. I don't quite remember what it was. Right. Okay, so Lehman Brothers collapse happened in 2008. Big spike there. 2010, what's the spike related to? Literally, I'm not kidding. It's not like randomly in 2010. If this was to the day and the week that the Greek bailout happened, to the day and the week that Lehman Brothers collapsed, it's exactly like on that day. It's not like you can't tell because it's over 10 years, but if you looked at this over a month and it was a daily plot. It would be just literally you'd see it building up and then a big spike happening, that day or prior to that day. U.S. credit downgraded, again another bump. Then it was kind of flat for a while. S&P 500 went up 50% during that 2-year time period. You could see the beginning of 2016 it started rising, and then it's been down a lot since the end of 2016, and I'm going to go through some details there. So that's all kind of whatever. It's not boring, it's interesting, but what's a lot more interesting is if we can actually predict things as opposed to just them happening at the same time or happening later. So who here has ever heard of the VIX? Lots of people. Okay, we have like 10 people. You should all know about the VIX. The VIX is known as the fear gauge or the fear index. So we thought, well, we're the anxiety index, which has to do with what people are reading about on Investopedia. They're the fear index, which has nothing to do with that, obviously. What it has to do with is option trading around the volatility in the market, and one has absolutely nothing to do with the other. The fact that if you look at the spikes are so similar to one another is pretty interesting. It becomes a lot more interesting, however, when you put them on top. And this is kind of the money slide. And what I mean by that is if you look at the spikes, almost every major spike happens at the anxiety index prior to a spike in the VIX. If you look at that. So you see that in 2008, 2010, 2012. And when there are sometimes a spike in the VIX, it's not long-lived prior to the anxiety index. So to me, what that means is that education and research happens before people take action. So for some reason, hundreds of thousands of people are starting to look up the word bankruptcy. Why are they looking? They're not all writing a term paper on bankruptcy. There's a reason why they're all looking up the word bankruptcy. Some percentage of that group is considering declaring bankruptcy or is looking at it for a family member or a friend. And if there's huge spikes in the number of people that are looking up bankruptcy, that are looking up how to short sell, that are looking up other types of things, then it probably means that some percentage of them are going to be taking action. And the action can then be found, obviously, in the month later, in the 2 months later, sometimes even later than that. So we thought that this would be interesting for each of you, so that's why I wanted to share the predictive nature of it. So what we've actually then done is we went to a quant trader, and we said to the quant trader, and there's all these quant funds out there, Two Sigma and Millennial and BlackRock has a big quant fund, and tons of money is moving into quant funds. And we said, we want you to we want you to analyze using the anxiety index instead of the VIX to determine which is actually better and will produce better returns. So we did a whole big study, and I'll send you my email, so you can, if you want to get a copy of the study, feel free to send it to you. And they found that on an annualized basis, the anxiety index helped people to help the investor to grow by 19% on an average in portfolio, versus the VIX was 14%, and a long-only strategy was 12.9%. That's like with a meaningful difference. It's a meaningful difference that compounds, that can be worth hundreds of millions of dollars, maybe to Investopedia, but certainly to someone that potentially uses the IAI, Investopedia Anxiety Index, for trading. It got us to think, should we now create an Investopedia Real Estate Index? Should we now create an Investopedia kind of oil index to help predict what's happening around the price of crude and Brent oil? Are there opportunities for us to create all these different indices that are out there that can help to have a predictive nature in terms of everything from commodities to options, et cetera? And not just Investopedia, but can all financial publishers potentially leverage their data in helping people to make more informed, data-driven decisions around the market? The answer is potentially yes. So I'm going to ask you a quick question with my 3 minutes and 36 seconds remaining. We did a couple of other data things, and I'll quickly show them to you. Question: what city in the United States, just yell it out, okay? As loud as you can. You're going to yell it as you can, right? Good. What city in the United States do you think one of their top 10 terms is stock options? What city in the United States do you think a top 10 term is stock options? Yell it out. What? New York City? Any others? Okay, so a lot of people said San Francisco. One or two people from Chicago might have said Chicago. Um, what's that? You're actually from New York, so then it is legitimate. The answer is, so restricted stock units is the 10th most looked up term in San Francisco. It's the 209th most looked up term in Toronto, and like the 200th in all these other cities. So it's interesting to see which, like even terms and which content is looked up the most. And you could do heat maps around that. So I'm going to show you two heat maps. This is one where California is the most. And oh, shocker, Washington State is the second most. Just a couple of decent tech companies that happen to be based there. I can't remember which ones. New York, obviously Massachusetts with its foreign biotech. Illinois has got a little bit of shading there. But what's interesting is how Colorado is so much stronger. By the way, that one there is Colorado. That's surrounded by lots of less colors because you hear about kind of the startup scene in Boulder, et cetera. Austin, again, Texas, a little bit stronger. Yes, Texas pride. That's kind of, you know, and again, an interesting way of looking at data. Another way to look at data. So we wrote this article, Retiring in the Philippines with $200,000 of savings. Okay, I just took a random article. And I'm like, why the heck is everyone in Nevada interested in reading this article? This doesn't make sense. Like, is it because of, I don't know, Las Vegas and they lose their money or whatever and they move back to the Philippines? Why does everyone in Nevada and in California care about reading about retirement in the Philippines for $200,000? WTF? And the answer is that we looked at where the Filipino population is in the US, which is a super strong population in southern Nevada and in California. And I guess lots of people want to move back to where their cousins, aunts, uncles, siblings, parents may potentially be around retirement. And by the way, we have 200,000 articles on Investopedia. So we could do this across literally every single one of the articles. Look at it from a geographic standpoint, look at it from an economic standpoint, look at it from an age standpoint, a gender standpoint, etc. We also saw different geographic differences in anxiety based on, Now, why would Montana and North Dakota be sitting really happy right now and be a lot less anxious? I'm not going to politicize, but there could be a reason. And why is California, Nevada, West Coast, and a lot of the East Coast very nervous? But for some reason, West Virginia is a bastion of happiness right now. I think you could probably know that because it matches up pretty well to the red and blue states, by the way. So that's interesting, I think, in and of itself around anxiety. 20 seconds left. Just want to talk about the power of data science as a sentiment index. We're currently at a 97 out of 100, which is pretty low. You can go on to Investopedia, and we have a daily update on anxiety, on our anxiety index, which you could look at. And that's the story, morning glory. Here's my email, and 1 second left. Just get the red light. If you would like to get a copy of the presentation, feel free to send me an email. There's a garbage in the back over there, and I'm going to be standing over by that garbage if anyone would like to chat afterwards. Have an awesome rest of the day. Hopefully what I say will not be garbage.